Hey there, welcome back to my channel, it's me the Mind Injector. In this video we've got an electrifying topic that's sure to spark your interest. We're diving deep into the world of Palantir Technologies, the AI powerhouse that's been making headlines in 2023. The burning question is it too late to buy Palantir Technologies stock? We're talking about a company that soared a jaw-dropping 177% this year, leaving the S&P 500 in its dust. But before you think about buying or selling, let's break it all down. Before we decide if it's too late to buy, let's understand why Palantir stock has been on a rocket ride. This year, Palantir has ridden the wave of the broader tech sector's recovery and the AI boom. We're talking about a company that's up 177% year to date, more than 13 times what the S&P 500 has managed to pull off. That's nothing short of impressive, and it's virtually erased the painful memories of last year when Palantir took a nosedive. Palantir's secret sauce lies in its long history of developing AI algorithms. They've been at it for 20 years, way before AI became a buzzword. This depth of experience has given them a level of credibility that sets them apart. Now, you might be wondering what made Palantir stumble last year. Well, in 2022, the world was a pretty challenging place. Macroeconomic headwinds were stronger than we've seen in over a decade. Businesses worldwide braced for tough times, cutting back on spending wherever they could. Discretionary spending, including technology investments, took a major hit. Palantir didn't escape unscathed. While their revenue still grew by a solid 24%, it paled in comparison to the impressive 41% growth they managed in 2021. This slowdown in revenue growth spooked some investors, leading them to bail out of the stock. However, in hindsight, it's easy to see that the mass exodus was a bit premature. Despite the challenging year, Palantir continued to deliver custom AI and data mining solutions, which set the stage for their comeback. So, why has Palantir stock been surging this year? Well, it's not just the AI trend that's giving them a boost. Their financials have been on a steady upswing. In second quarter, they proudly declared their third consecutive quarter of GAAP profitability. They're heading towards sustained and durable earnings. This trend is underpinned by strong operating and free cash flows, which have consistently exceeded Wall Street's expectations. The management's optimistic outlook further adds to the rosy picture. Their artificial intelligence platform, or AIP, is taking off, with over 100 organizations adopting it and discussions with another 300 in progress. The demand for AIP is off the charts, and analysts are predicting a $1 trillion AI market by the end of the decade. Even conservative estimates are incredibly promising. Now, let's look at the elephant in the room, the stock's price. Palantir's stock has surged this year, and that has correspondingly increased its valuation. Right now, it's trading at approximately 18 times trailing sales and 14 times expected sales for the next year. That's a lot of growth already priced into the stock. This isn't a get-rich-quick scenario. If you're looking for a fast profit, you might want to reconsider. However, if you're in it for the long haul, this is where things get interesting. The stock isn't for everyone, but for investors with a long-term perspective, it could be a gold mine. Palantir's unique expertise and the sustained tailwinds in the industry suggest that they could be set for several years of growth. Wall Street is looking for double-digit revenue growth and quadrupled earnings per share by 2024. While the stock may not be cheap, it could be the start of a long and prosperous journey for those who are patient. In today's data-driven world, information is gold. Palantir understands this like no other. They build custom software solutions that help organizations, both government and commercial, to make smart, real-time decisions. This has never been more important. Their customer base is divided into government and commercial, with governments, especially the US and its allies, accounting for 56% of their revenue. The rest comes from commercial customers, mainly US companies. In the current geopolitical climate, where defense spending is ramping up, government contracts are a significant revenue source. Recent contracts with the US Army worth $250 million are a testament to this. On the commercial front, the steady growth continues with a 38% increase in the US customer count year over year in second quarter. Late last year, Palantir made a financial U-turn. They reached a point where earnings began to outrun costs. Over the last 4 quarters, their free cash flow and net income have skyrocketed. This financial stability is a significant milestone, and their earnings per share have been positive for the past 3 quarters. With a cash balance of $3.1 billion and no debt, they have room to maneuver. Moreover, they've initiated a $1 billion share repurchase program, which should decrease outstanding shares and further boost EPS. Before we get into the exciting details, let me introduce you to Mumu Financial. If you open a brokerage account with Mumu and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just 1, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. Now, about the stock's price. Yes, it's had a great run in 2023, but it might still have room to grow. The forward price to earnings ratio is around 78, which may sound high compared to the S&P 500 price to earnings of 19. But when you factor in the expected earnings growth, it becomes more reasonable. Analysts anticipate Palantir's EPS will grow by an average of 66% annually over the coming years, a rapid pace. When you consider the valuation in relation to this growth, the PEG ratio comes in at 1.2. While not a bargain, it's certainly an acceptable price tag for long-term investors. Of course, no stock is without its risks. Palantir could remain volatile, and day-to-day market movements are unpredictable. However, with their continued demand in government and commercial sectors and the potential for explosive earnings growth, Palantir deserves a closer look. To add another layer, there's a substantial contract up for grabs from the UK's National Health System, a contract that Palantir could potentially win. Their expertise in healthcare, coupled with their previous work with the NHS during the pandemic, puts them at the forefront. So, is it too late to buy Palantir Technologies stock? The short answer is no. While the stock has had a stellar run in 2023, the long-term outlook is still promising. With a robust history, financial stability, and an increasingly data-hungry world, Palantir might just be the golden goose for patient long-term investors. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.